Hello and welcome to Smith Wilkinson's insurance panel discussion. I'm joined here today by several individuals who are helping to lead innovation in the life insurance space. I'll make introductions. First, we have Michael Stricker. Michael Stricker is Chief Administrative Officer of Sagicor Life Insurance Company. He joined the company in 1997 with experience from the insurance software industry as the Assistant Vice President of Information Technology. Michael has a Bachelor of Science degree in Management Information Systems from the Southern Illinois University at Edwardsville and has been involved in the life insurance industry for over 20 years. Welcome, Michael.
Thank you.
Next, we have Brian Poppy. Brian is the Senior Vice President of Departing Well Solutions at Mutual of Omaha. Departing Well Solutions is a business unit designed to serve customers who feel the responsibility to take care of their own departure and take this burden off of their families. Brian heads up the business unit, which serves over 1 million customers and generates approximately $1 billion in revenue. Previously, he served as VP of Innovation Strategy and has also worked in various actuarial pricing and product development roles, both at Mutual of Omaha and Lincoln Financial Group. He received his bachelor's degree in actuarial science from the University of Nebraska-Lincoln. Welcome, Brian.
Thank you. Happy to be here.
Next, we have Donna Germer. Donna Germer is Vice President and Distribution Lead for RGAX, the transformation engine of Reinsurance Group of America. She's setting and building the strategic foundation for development and execution of RGAX's innovative distribution initiatives, including the building of life distribution capabilities, agency services, and ongoing distribution operations. She joined RGAX in 2016 after previously working with Western and Southern Life Insurance Company and Protective Life Insurance Company. Donna's undergrad was completed at Bowling Green State University, and her MBA in social media marketing is from Rutgers. She's a past president of Loma's Life Insurance Council and a frequent speaker at industry events. Welcome, Donna.
Hey, thanks. It's a pleasure.
Finally, we have Grant Andrew. Grant Andrew is Vice President of Strategic Transformation and Innovation for Allstate Life and Retirement and joined Allstate in August of 2016. His accountability includes researching customer insights and key stakeholders, market intelligence, and technology for developing and implementing the strategy and integrated consumer-focused digital experience to drive transformation and innovation across the business. Before coming to Allstate, Grant served as Vice President, Financial Institutions and Wholesaling at Legal & General America, where he was in charge of building and deepening relationships specific to this channel. Grant has a bachelor's in Business Administration and Finance from University of Delaware and earned his MBA with a concentration in marketing from Rutgers University. Welcome to you, Grant.
Thanks, Ken. Appreciate it. Thanks, guys.
Excellent. Donna, we're going to start with you.
Okay.
Donna, innovation is a widely used term in the insurance industry. How would you define it in the context of your company and the broader industry as a whole?
For us, we're taking the word innovation and we're taking it beyond it being just a buzzword that's out there without a lot of meaning behind it. So for us, innovation is really a key to keep insurers growing regardless of the economic or market shifts or conditions that are taking place. And so we use it to really devise ways to thwart off and help carriers understand the ongoing and emerging competitive threats that are happening. And we've put a framework around it so that it's not just a word that's put out there, but that we help carriers really understand from a strategic perspective how to leverage innovation in order to keep moving forward. So we do a lot of design sprints in the spirit of innovation to help them understand and empathize more with whatever the user may be going through, to identify what the problems are that the user experiences. And then we then brainstorm and we figure out from a validation perspective what concepts from an innovation perspective they could evaluate and putting forward in order for them to create different prototypes or problem statements that they want to hypothesize and test, and build that potentially out into a prototype and then even commercialize it or make use of it within their business. So for us, it's we drive it both inwardly for ourselves and our practice and building out these frameworks and strategies, and more importantly, we evaluate how we can make it effective as a means of staying competitive and really capitalizing on new opportunities for themselves and for the industry as well.
Thank you. Grant, next question. What are some examples of industry disruption that get you excited?
You know, it's interesting when you say that. I look at our industry, so there's things that, from a property and casualty perspective, it's been lemonade. You think about it, Policy Genius, a data aggregator for carriers to sell life insurance. It's companies like Ladders for Mass Mutual that in our industry that have built online platforms digitally, you know, end to end. I think that's exciting things for us because it's changing the paradigm. The old way of thinking is no longer acceptable for us, that we can think of that I get the application, I have 30 days, and I churn it back out, isn't the expectation. I also think you need to expand on that because, to me, other parts of disruption are things that consumers themselves are seeing. So I will bring in the cliche in Amazon or a Zappos because I think, what if those organizations decide to say, we want to sell insurance online to, say, a call center format of a Zappos? Or what if you see an Amazon and they partner up, as they've done with others, or buy somebody that says they want to get into the financial services industry? It may not be Amazon, it could be anybody. So I think those types of things excite me. The other part I'll just mention, which may be totally different than people may think, what about Tesla? And the way Tesla is now connected to a consumer. What about us when we think about other carriers in there, they're wearing wearables and now making a direct connection to their life insurance policy and making changes in their lifestyle that directly reflect how we are now insuring them and changing the annual premium. So I think those are some of the things that I believe are really exciting and causing us to think differently beyond just the normal, what we hear of the fintech or our global incubator and accelerator type programs that obviously we're looking at as well.
Great, thank you. Brian, which industries do you look to emulate as you execute on your strategic plan?
Yeah, so there's a couple that we look at. The first one is the fintech industry. So banking is maybe, I don't know, 5 to 7 years ahead of where we're at on the insurance industry side. So it's kind of fun to see what they've done from a customer acquisition or customer experience kind of standpoint, and then see if there's anything that we can glean from there and bring over to the insurance industry. At Mutual of Omaha, we're a life and health carrier. So it's also interesting for us to kind of watch the property and casualty companies and how they have done either doing the same thing, like recruiting or even using IoT in interesting ways. So Progressive Snapshot is fascinating to think about what the equivalent might be on the life and health side. You've seen John Hancock, I guess, come out with their Vitality program as a way of doing something very similar of taking what amounts to telemetric data and then using that to either change customer behavior or get new insights about that customer. So in my opinion, we don't have to look too far outside of our own industries in order to do that. I mean, obviously we've done a little bit of the thought exercises that Grant applied, which is like, what would it look like if Amazon were to do this? And that's category changing almost, right? Of to the types of things that Amazon could do that we may not have considered. So we found that helpful as well.
Great. Michael, next question. Michael, change will always be a consistent theme. However, now it appears to be faster than ever. How is your culture dealing with the pace and agility of the disruption to the industry?
Well, I think the culture is not really, we're not dealing with the disruption. We're actually changing our culture to be the disruptors, and the idea of changing how we look at things and how we approach ideas. You know, we want to be the innovators and not copy what's out there and take the lead from others. So we're trying to get our teams and build a culture in place of technology and how to leverage what we have, but also to look at outside of our industry and see how others are leveraging technology so that we can continue to figure out ways to take those ideas and to enhance the insurance industry in the direction that we're going as well. So to me, it's not that we're dealing with the pace and the disruption of the industry, is that we are now changing our culture to be the disruptors.
That's great. Donna, back to you with this next question. Donna, insurance has not traditionally been thought of as a particularly innovative industry. Are there particular companies or sectors that you feel are the primary drivers of positive change?
And even when you say sectors of positive change, I think there's positive change that's taking place, both from disruptors and like what Michael was saying in reference to carriers that are moving things forward as well. So by way of, we look at the opportunities in the value chain and understanding what areas are there ripe for change and taking different technology advancements and then optimizing them as it relates to life insurance. So for instance, with robotic processing automation with RPA and leveraging chatbot technology and making it so that the sentiment analysis and having consumers engage with getting a quote. So a lot of the banking and financial services are looking and leveraging RPA right now on the back end for customer service, but we're pulling that up in front for the value chain and then also leveraging it on the backside so that the expectation of the consumer remains consistent from when they bought to how they're being serviced on the back end as well. So a lot of that is, you know, we're looking at those new drivers and transformational ideas and concepts. A ton of operational cost reduction programs that are being done. Know your customer, know your buyer is with predictive analytics, contextual analytics, the way that we're doing programs with form theories and looking at how we observe data, how we collect data, and looking for patterns in data in order to do additional hypothesis testing to really help with identifying consumers and eliminating some of the fraud factors that are out there. Blockchain is not really evolved as a standardized practice, but as it relates to know your customer and some of the other requirements that are going to be needed in order to drive greater direct-to-consumer programs and capabilities, that's going to be an easier facet to leverage and utilize as it relates to that particular problem. So there's, you know, those are the sectors as it relates to acquisition, operations, and then even some of the regulatory confinements. That's where and what I've seen really change and be adopted within the insurance sector right now.
Great, thank you.
Sure.
Brian, next question is for you, one of particular interest to me. Have you derived benefit from interacting with strategic leaders outside of the insurance industry?
Not at all. Just kidding. Thanks for the stuff. So yeah, absolutely. For me, I got a chance about a year and a half ago to talk to some folks in the manufacturing industry. And that was really fascinating to hear them talk about how IoT has really, Internet of Things, excuse me, has really changed not only how they work, how they process, but how they make decisions. So, I mean, we talk a lot as an actuary, right? We make data-driven decisions, and we can do that ahead of time when you're selecting risks and doing some pricing and so on. As you get more IoT-type data, that compression time from when you make that decision goes from months in advance to in near real time. And so to hear from manufacturers, like conceptually you get that, but to hear from manufacturers saying that like, no, this is what we actually did. These are the changes that we actually made from the data that was coming in from various sources. And we adjusted our process, or we could get some expense improvement, was really fascinating to me. Certainly looking at the tech industry has also been helpful too. You realize that like we, like a lot of insurance companies, have a natural build bias where like, oh yeah, we can do that. We'll do it ourselves, and we'll do that better than anybody else can. But then you look at somebody like Uber, and you see that Uber does actually very little in creating that customer experience. Somebody else takes the payment. Somebody else does the mapping. They've got the algorithm to do the matching. Somebody else does their background checks. So there's a whole bunch of things that Uber doesn't actually do in order to deliver that customer experience. And so when you think about tech companies, the answer is always like, yes, we can do that. And it's, how do I find a partner that can do that? Because I may not be able to replicate their success as well as I can. So for me, those two together, manufacturing and then just technology in general, using Uber as an example, have always been really interesting for me to watch and say, what would it look like if you could apply some of those principles in the insurance industry?
Sure. Great. Grant, next question for you. Aside from the usual suspects, like the regulatory bodies, legacy systems, et cetera, what are some of the most significant hurdles you encounter in executing on your initiatives?
Yeah, I think I will go, one of them is going to be the legacy system. I don't think you can ever get away from that, but one of them is going to start with, and I think it's important, is you start with the research. You start with that vision and that strategy. It sounds trite, but you really need to bring everybody along when you're talking about change management in general and thinking about how you're going to move your company to be able to meet and exceed the customer's expectations. I do think when you move to the second point that I'll mention is the legacy systems. It's the legacy systems, and I'll describe it as we're flying a plane, and while we're flying the plane, we're actually building it. And that way, to me, you can understand the challenge that comes in with it, because most of us have systems of 20 plus, 30 years old, that you're all adding new systems, and then you're also upgrading at the same time. So again, it makes it a little bit more of a complex challenge, and you have to be able to build that time frame and what makes sense. And the comment that was made earlier, around that, I think it was by Brian, touched on it, said, when you think about your systems and you think about what you're doing, you do have to take that in consideration. And again, to make the changes that you're talking about, to incorporate, hey, do I build this and we want to build everything inside? Or what I believe that was really being mentioned is almost like crowdsourcing. Is there a way of using it where you're buying a vendor package where theoretically everybody gives input to that and you get a better package overall? The third point that I'll mention that really is impactful to us as far as the change is the deployment. I think we overlook that sometimes because we say, hey, we build it and they will come, and the field of dreams doesn't happen. You really need to think about your go-to-market strategy, and what we think about here is in an omni sort of approach. That you think of it and say, we have obviously very proud of our agency distribution. You go out there's 10,000 agency stores, which is fantastic for us and gives us great presence and great customer service. But in addition, people now want to be able to call the 1-800 number and be able to do their business, all of it, theoretically with the call center. And lastly, it's doing it online. Again, a lot of times you'll see stats out there that people will start. I think it's one that I saw from LIMRA, 87% of the time people want to start their research online, but still there's a number that's around 32, 33% of the time they still want to talk to an agent. So I think when you're building all of these situations, you're building all your solutions, you have to build it in there. And that's the kind of change management that I think we have to be thinking about and building it so it really does make sure that it meets that consumer-centric type of view.
Thank you. Donna, back to you. Blending employees from different generations in the workforce has been a topic of interest in driving innovation. What has been your strategy in onboarding younger talent who may think differently than your tenured workforce? Donna, I think we lost audio on you.
I hope that's better.
Oh, you're back.
There I am. No, so we've put a great deal of thoughtfulness and strategy around how to do blending, just because of the potential friction that could be out there with thinking about things differently. Insurance is a very risk-perverse industry, and so when driving in younger talent, there's a lot of patience and education and understanding around the regulatory environment as well. So for us, it was making certain that we had a strategy to make them successful and enable them to have a forum to have their ideas and thoughts heard so that they wouldn't be shut down immediately, potentially by some of the more seasoned thinking that is tied so far into not being open-minded, potentially around the change elements that some of the younger segments and younger cohorts could bring to the table. So it really became more of that strategy and framework and onboarding them, getting a lot of mentorship, aligning them with certain players, and again, making certain that there was a forum for us to listen to their ideas, make them a part of user-centered design and contributing to UX. Because it kind of goes to what Grant had touched on before as well, where when you look at crowdsourcing and the way that they work through communities and they work through technology, understanding that we have to be able to adopt, even when I hear statistics around the fact that consumers research online but they buy offline, is that a reflection of their preference, or is that a reflection of the fact that we haven't given them a resource to really buy the way they want to buy online, right? So I think there's a whole generation out there that's contributing new and fresher ideas. Not to say some of us seasoned people can't also bring some decent ideas to the table as well. But I think it really starts with a recognition that if you're going to onboard millennials or some of the younger, bring in younger peers, that there has to be thoughtfulness behind it, because I learned the hard way where there's an expectation that we can all work harmoniously together. And with the tradition and the tenure that's involved with this industry, there really needs to be a structured and a thoughtful way of making it happen.
Sure. Thank you. Michael, next question for you. From an innovation standpoint, what are some of the more important lessons that you and other senior leaders can pass along to upcoming insurance professionals?
Well, I think the theme of this is that change is here and change will continue to happen on a regular basis, unlike it has in the past. And I think as we move forward, there's opportunities for us to become innovative and bring solutions to the table that'll solve some of the regulatory legacy new product ideas that maybe we don't have in house. And so there's opportunities to look for partners to really work alongside with you to develop a program to solve and to bring your solutions to fruition. From our perspective, sometimes in the past, we've always thought that we had to build everything in-house. And I don't believe that's the case anymore. I think there's opportunities to go out and look for, I don't want to say best of breed, but there's opportunities to leverage the technologies through other innovation partners that'll help you get to where you want to go a lot quicker and faster. And you don't have to assume the innovation, the whole channel of the innovation all yourself. So, everything's changing. Everybody wants to become Amazon from that standpoint. They want to have that customer experience. They want to have that sale now and that product in their hand right now. And, for us to continue to change on a quick basis, we need to look for partners that are going to help us get there and leverage their ideas.
It's a great segue into the next question for Brian. Brian, in your view, how has the emergence of insurtech players influenced the manner in which your company treats innovation?
Yeah, I mean, I think you've heard a lot of that in the conversation today, right? You've heard about, I'll use Lemonade just as an example for a second, and connecting with Grant, bringing them up to Donna's comment on, is the research to offline purchase, research online to offline purchase, is that a preference thing, or is that just the process by which insurance companies have enabled it? So that's the only way that you can get a policy with several different carriers is you have to purchase offline. So when you're doing actual customer survey data, it's hard to know if that is actually the way that the customer wants to execute, or if they're just used to it or they're forced into it because of our legacy way of thinking. So it's interesting to watch the Lemonades of the world, for example, and how they would say do customer acquisition or do claims payment, and then begin to say, okay, how has that influenced how we think about things? What should we be doing differently, or should we be doing something differently? Maybe the answer is like they're doing something that is outside of how our customers want to interact with us, or want to file claims, or want to purchase. But at least introducing that new thinking or those new concepts, or even you had Michael talk about the tech companies that producing new solutions. Just even opening up your eyes enough, or looking outside of your walls enough to be able to see and consider those new solutions has been significantly helpful for us in crafting what an innovation path should look like. So before it was, what are the creative ideas that we can come up with? And I think we've, at least at Mutual Omaha, come to recognize that not all great ideas come within our four walls. And so the more that we can put our heads and look out, the better off we will be as a company, and ultimately the customers will be, because they'll get served in the way that they want to, and they can interact with us in the way that they want to.
Right. Grant, back to you. What is the role of reinsurance in the future with accelerated and continuous underwriting?
Well, I guess I'll take a start of this and let Donna finish up wherever I miss, because from our reinsurance expert. But
Sure.
From my perspective, it starts with their, the incredible depth that they have from a, warehouse of information, but the data analytics that they can provide and the information they can provide from an accelerated underwriting, obviously helping us there. I think, the product development is changing because of the ability to partner with our reinsurance partners there, as well as the platforms. I mean, reinsurers are changing the way they're looking at their own business, and I think that's a great thing for us when we think about it. Some of them have their own platform, that they actually have their own theoretical black box, that they have built on, sometimes on credit models, some of them being also built on wearables. And I think that's where it's really tremendous that you can get that kind of partnership, because again, they're someone who has access to a ton of information. Obviously, they can't share parts of it. They have to share it in more of a global perspective, but it's something that's where I feel they have that tremendous opportunity to help us, because again, I think that the world is changing, and yes, the view of telematics that was kind of mentioned before about how to connect with someone. You heard me mention Tesla. I do view that continuous underwriting is there. It's out there. It's going to happen. That the consumer wants to connect with us. That they want to be able to adjust. We've seen that take place on other markets where now we have DriveWise. We have products that we offer that allow people to connect, adjust, and learn and get better premiums. That makes sense for life insurance. It makes sense to have a shorter duration type of life insurance product, in my opinion, that normally we have the classic 10, 15, 20, 30 years and plus. With permanent, why not allow them to adjust? I do believe that's the way the world is changing. Pay me or charge me just for what I need. I think you're going to see more of that taking place. And the reinsurers are in a great spot to be able to work with us and partner with us with that risk and the development of new products as well as the new processes.
Donna, I'd love to hear your brief response to that.
Yeah, no, I totally agree, because that's exactly what we're doing, is putting a lens on traditional risk and breaking it apart just because of the vast amount of data that we are collecting for those reasons. We have a new wellness partner that we aren't in a position to make reference to it yet, but that is also going to be just an incredible play, both with acquisition and engagement, to help carriers, again, try to look at risk differently, look at product bundling differently, to Grant's point, as far as not going in there and pricing it in such a way that it's a one and done scenario with just a one product fix, but looking at the life stages of a consumer and how that building process can be leveraged from a carrier for their own value proposition purposes. So we want to eliminate the opportunity of commoditizing financial products and making certain that carriers have a better way of evaluating their own unique sales positioning and value proposition, so that where they're going to be competing in the market, we're going to be providing them a means of getting it done quicker in an accelerated fashion, just because of the new partnerships that we can lend into the equation. And more importantly, that we can take a look at risk a lot differently just with the vast amount of data that we are collecting for those purposes. So I'm excited about where we're going with it and how the industry is going to be dramatically changed as a result of it as well. Because I think the typical product sets and portfolio and pricing and the way that risk is evaluated right now is not going to be the same way in just a matter of a couple of years.
Right. Thank you for that.
Yeah.
Final question, Michael, what else can we be doing as an industry to better understand our consumers, to be more accessible and user-friendly, and to overcome the perception and reputation of insurance as a necessary evil?
Well, that's a loaded question. I could probably answer that for about an hour. I think, the biggest thing to me is probably a combination of education and simplicity. One of the reasons that I think that's an evil is because in the past, life insurance has been so difficult to go through the process and to accomplish. And, you kind of look at some of the other insurance industries that are out there today, P&C, for instance, car insurance, everybody understands they need to have it and why they need to have it. But the simplicity of being able to purchase has made a difference over the past several years to go about that. So I think as we continue to educate the consumer on the importance of life insurance and what we're doing to improve that overall understanding of the need and why it's a value add to the owner. I think that educational process will help them understand why they need to go out and look at it. And then simplicity of purchasing the process will really add to that. Everybody's expecting to go out to the website and purchase something now and have it in their hand. And as long as we're taking 30, 60 days to underwrite a policy, the understanding and the simplicity is not going to be there for them to really buy into the process. So those are my two thoughts on what I think we need to continue to do, and that's something that we're focused on as an organization, is to really educate the importance of insurance and what it means to protecting a family and their legacy and the education that goes along with that. So.
Great, thank you very much. And that wraps up all of the questions for today. I'd like to open it up to any final thoughts from the panel. And one thought that I would interject is, it's been so interesting for me to hear how consumer-focused the discussion has been. It's really kind of working from the consumer backwards. And I think that's such a fundamental change for the industry, understanding who the consumers are, how they purchase, how they think, and really anticipating some of those needs. And that's really kind of the core of innovation within the insurance industry. So it's been great to kind of pick up on that theme through what everyone's been talking about today. So any final thoughts from the panel members?
Yeah, I'll go. I think to pick on what you said there, or add on to it, Ken, from my perspective, I totally agree. I think if we look at the demographics and the generational points that you've mentioned and the questions we had on that, from a consumer standpoint, if we're going to save you time, save me money, we also hear all the time, know me, make it easier, and protect me for things I may not even know. I mean, that's what we think about from an Allstate perspective. And I think we touched on it before. If we think of it from an omni-channel perspective, we may push on it and say, hey, maybe they do want to do it online. Maybe they want to talk to an agent. To me, I think it's the simplicity is that we have to provide all three. You want to do a face-to-face discussion with us. You want to have a conversation. You want to be able to do it over the phone because you're concerned, your time is money, or you want to do it online because you want to do it at 3 o'clock in the morning. We have to support it. And I think that's something I think about. The final thing is, you touched on one of our questions, was partnerships. I think we are going to have closer partnerships with reinsurers. I think the carriers themselves may even foster partnerships that we not even contemplate. Banks do that today. Financial services has gone that way. I do think that things are different in how partners that we look at. We now at Allstate actually provide the insurance for Uber. Who would have thought that 5 years ago? So I think that, that's the kind of things I think are going to constantly change over the next, few years. And I think it's pretty exciting, and it's accelerating, which is even more exciting.
Yeah,
I mean, please, Brian.
Okay. I think you hit it on the head. The economy broadly, not just insurance, has changed. We're now consumer-driven or demand-driven rather than supply-driven like we have been in the past. So before, we were a necessary evil. Customers knew they needed it, insurance in general, and we could force them down a particular path because we were the only way to get it. When customer expectations have now changed to be, I need that on demand on my time, we can't sit back and let customers continue to go down the path that we force them. We can't say the only way you're going to get this thing that you really think you need is by following these 8 steps over the next 60 days. Customers just won't stand for it, and frankly, like some of us are competitors around the table, we won't let the others do that, because otherwise we'll figure out a better way to serve the customer and take that market share. We're all kind of saying, like, we recognize consumers are kind of leading the charge here, as much as all we're doing is reacting to the way that the customer wants to interact with us. And I think that's going to continue, not only in insurance, but across all industries.
Yeah, no, I would agree. I think that's been one of the challenges that we've had with making certain that carriers stay relevant, is understanding that the world no longer just revolves around the agent, but that the consumer needs to come first, even though the agent is still definitely going to be a part of the process, is an optional way for the consumer to buy through. But that's a big operational shift, a paradigm shift for the way insurance carriers have been really allowed the consumer relationship to be owned by agents. So with that said, I think Brian hit everything and Grant both. So there's a lot of changes, and it's exciting that I think that adoption rate is accelerated so much more than my expectations initially, even when I started first looking at it in 2016 from an RGAX lens and seeing how I felt like that it was going to be a pretty big uphill battle, but surprisingly, carriers, for their own point of being relevant, have really kind of shifted into consumer centricity and understanding that those changes need to be made.
Yeah, I completely agree. The consumer side of it is extremely important, especially in a environment where you have simple access to just about anything and anywhere you want it online. And you know, the relationship with the agents in the past, they'll still have that relationship, but the consumer wants to understand more about who they're buying from today than in the past, where you know they bought it from their friend, the agent. Now they want to understand who they're buying it from and have that relationship more involved with the carrier as we go forward. And that's shown with just the online access to information that they want and the demands that they're asking for from the carriers to give them on a daily basis through 24/7 access. So it's going to be an exciting, you know, couple of years coming up, just because of all the technologies that continue to come out and how, you know, all of us as carriers continue to leverage those technologies and take this industry into a whole different arena as we go forward.
Great point, Michael. Thank you so much. Thanks to everyone who participated and really for the valuable work that you do for the industry. It's been a pleasure meeting and speaking with all of you.
Well, thank you, Ken. Appreciate you setting this up, and thanks to the rest of the panel members. It was awesome. It's enjoyable.
Yeah, thanks, everyone. It's been a pleasure. Take care, all.
Thank you.
Bye for now.
Bye-bye.
Bye-bye.